All right, y'all. What's up? Welcome back to another episode, another video. It's what you doing out here? And today I'm going to be talking about things that's going on in the market currently. A lot of people are scared. A lot of people are selling. Um, and I mean, it's just very like unusual times. It's not. It's just like anything can happen in a market like this right now. And so I think a lot of people are like overwhelmed and just trying to like find ways to make money in the market. And a lot of people are getting caught either shorting or playing the long game. So I mean, I'm just gonna be breaking down, or I'm just gonna kind of hopefully I could just kind of just give you guys a little bit more information on what to look for today, and just kind of get you guys to understand that yes, this is an unusual time. Like things can happen at any moment with the Iran war going on. But I just want you guys to just relax and don't sell just yet. Um if anything, you should be looking at opportunities to buy, right? So I'm gonna be like just kind of hopefully I can help you guys out a little bit more, help you just understand a little bit more on what to look for. And um yeah, pretty much that. So without further ado, you're gonna get right into the video, man. So for what I see here, let me see if I can capture my iPad screen. Hold on, y'all. All right. So what I see here, what I'm on TradingView right now, and I'm kind of just going to be breaking down what's been going on. So the S&P 500 hasn't gone down as much as it seems like, right? These past couple of days, these past few weeks, it's been feeling like just it's just been feeling bad, man. And so everything's just been seeming like everything's just been going down when in reality, like most of these stocks are only down like a couple percent. So like the S&P 500 is only down like 1 or 2% year to date. Uh, the Q's is down, I think, a couple percentages, but it's not like it's been down like 10, 14%, even though it feels like it, right? But I'm just gonna kind of break down just a little bit of what I see, right? So this is the moving averages right here. I'm on my EMAs. I got my EMAs up, and so this is what I see. I'm currently on Google. Let me go on yeah, let me actually go to all right, so let me go to the S&P. This is the S&P, right? So this is what I see. It was bullish from around May all the way until around November. And then it was a think the credit card crisis started right here. And then you kind of see it going up a little bit and then it's dropping right back down, right? So as I'm looking at the EMAs, right? What you want to see in the EMAs, and I always recommend people to have EMAs up. You don't have to have it up like while like trading live, but to help you better understand, I think that you should have EMAs up. So let's just draw this out right here. If I can let me see. So that's your 200, 150, and then the 20, right? So what I'm basically looking for is I want all the EMAs to be going in a single file line up, right? So I want the 20 to go up like this, the 50 to go up like this, 100, and the 200 like this. And that represents a bullish market. So when you see the EMAs going up like that, that represents a bullish market, right? So you see with this right here, this is the 20, this is the 50, 100, and then a 200, right? So it's it's in a single file line going by how it's supposed to be going, right? And oh shoot, my camera not even like. All right, y'all was looking at the screen, but not even my face. I don't even know what that was. Like I don't even know. I don't know. That was a little weird. I didn't even know why I did that. But so yeah. So you can see the S&P is going in 20, 50, 100, 200, right? And it's going in this single file line and as it's supposed to be going up. Well, when you look at things like well bearish markets, right? You see things start to overlap. So, for an example, during this time, you can see the 20 overlapping with the 50. And then the 20 even comes down below the 100 and even below the 200. And so that's going to represent a bearish market. Anytime you see something overlapping, especially if you see the 20 overlapping the 100, I think that's a sign that a bear market is occurring. So that's one thing that I'm looking at while I'm looking at most of these stocks. Um, but then you also see this 200. Look at the 200, right? You see the 200 it's going over the candles. That's not what the fans want to see, right? That is a perfect example of a bear market, and that is not what the fans want to see, right? So you can see the 200 MA over the stocks. These are perfect times to buy, actually. So if you're looking at this from a buy and hold perspective, um, just buying stocks now, trying to figure out times and places to buy. Even if you don't know anything about chart analysis, uh, just like anything, where to find like good buying points, like trying to find trend lines and all that. Like even if you don't know that, if you just have these EMAs up and you see the 200 overlapping with the current candlesticks, that's a good sign to buy in my opinion. Especially because it is considering or it's basically saying that it's a bear market. And so you can even go back further, right? Every time you see something like this, um, just anywhere. Oh shoot, I'm tripping. Anytime you see this anywhere, I don't think it's gonna. Okay, so you have this, and it was a dip right here, and then you see, as you can see, the 200 was under. I mean, no, no, no. The 200 was over the stocks, the candlesticks. 200 was over. That was a dip. 200 was over. That was a dip. So I mean, as you go, like this was a huge, golly, this was a huge bear market right here. That was a long run right there. Even if you just like look at this, y'all. The 200 is all the way up here, bro. Dog, the 200 is all the way up here. The 200 should never be all the way up there, especially in a bull market. Like 200 MAs should always be at the very, very bottom. And it should never cross the candlesticks. It shouldn't even be near the candlesticks. It shouldn't even be touching. So the fact that these are overlapping and it's even above the 20, 50, and 100, that's a good sign that this is a bear market and that this is a great opportunities to buy. Now look, we can go to let's go to Microsoft, right? So Microsoft, we can go mm, Microsoft right now. Okay. So this is Microsoft right now. What do you see? This is what do you see, right? From what I see right now, I already know that it's a bear market going on. And so this will be a good opportunity to buy, especially if you're doing buy and hold. Now, if you're trading, I would limit how much I'm actually like doing right now. The market is live, that's why it's moving. But I would limit myself or I would just hold back on a couple of plays, especially because this is a market where it's just very uncertain and you don't know what's going to happen. Something can happen tomorrow and all these stocks will drop. Something will happen tomorrow and then all these stocks will go up and spike. You cannot control what's going on right now, but I just want you to better position yourselves. So I would say, for example, this is a great time for buy and hold right now. You don't even have to trade options right now. This is just a good time for buy and hold. And then just positioning yourself for when we have like more better opportunities to just invest and trade into like things like swing and options and things like that. Since the market is so uncertain right now, and like you got tech stocks falling, but then you got energy and oil rising. And it's like everything is like everything is just like off right now. And you wouldn't really you shouldn't invest or you shouldn't really me personally, I'm not touching anything option wise right now because of how uncertain it is right now. Right. So I'm mainly looking at buy and hold opportunities. What I see right now is a good buy and hold opportunity. You see the 200 over the 50, the 20, and the 100, right? And it's not like it's going to drop down. Like it can't really just like do something like that. So in order for it to go back under, it's gonna have to like do some extraordinary, crazy work right here. It's gonna have to pull a something out of it. Mm, it's just gonna have to pause. You know what I'm saying? So that's what I see that could possibly happen. But even just looking at that, like this is a great opportunity to just buy, simply because of the fact that if you even just look at the MAs, the 200 is over. So that would be a very good opportunity. Now let's go to Amazon. I don't really know too much about Amazon right now, but I can see the 200 is over the 20. That's a good opportunity to buy. Very great opportunity actually. But it's not too far from the all-time high. So, and another thing that I would say, do not try to buy every single dip. Do not try to buy every single dip, right? So you see 15 dips and you want to buy every single dip. Get the dips in increments, right? Get the dips in increments. God dang. Apple's actually doing pretty good, but get the dips in increments. If you see a dip right here, yes, you could buy this dip, but do not get like another dip. You could buy this dip right here, and then get this dip because it's still under the moving average. No, what you should be doing is just if in increments. If you buy a dip at $50, your next dip should be like 10% after that, or 5% after that. Or you could just say, I'm gonna buy one at $50. And if you go back down to the 40, then 35. Like do something like that. Don't just try to buy every single dip, because then your average is not gonna like it's not gonna really add up for real. So yeah, that's one thing I would say. Um, and I didn't want to talk too much like game. Oh shoot, because I just want to tell you guys how I just see a lot of people like scared right now, and I just want you to know that yeah, while this may be like a very uncertain market, um, you shouldn't really worry about selling anything. Do not sell anything. Just hold off. If anything, hold off for the long run, especially if you are buying and holding. Yeah, you could buy a couple of shares. There's some companies that's down. You could find some great companies that's down 15, 20%. Let me just hold on. Let me just, because I know Oracle's down like mad right now. I bought some Oracle earlier when it was like way under, right? So Oracle, perfect opportunity to buy right now. Perfect. Um, you can see it's obviously in a bear market. I'm talking about bear market. So just looking at these things like um, this can be a very good thing to look into and look at. And just like realizing if you start to see things overlapping each other, especially when it should be just going up in a straight line, and you start to see like 20s overlapping the 50s, especially seeing like the 200s overlapping anything, I feel like that would be a good time to start looking at uh, why it's going down, and then also just looking at pinpoints or just points where you could just buy and hold and then just invest. So today's video was mainly just me talking to the buy and hold people, and like if you are trying to do options or day trading, I would day trading in this market right now, like dog, nah, bro, nah, nah, nah. But yeah, man, I just wanted to come on here and kind of just explain to y'all like what I've been seeing and just what you can do to prepare for times like this. It's a lot of factors that's going on right now that's influencing the market. All right, so you got the tariffs, you got the credit card, like the credit card stuff right now. You got stuff going on with banks. Um, it's like a silent government shutdown right now, like TSA workers. People are telling people to get the airports like 5 hours early. Like it's just crazy stuff going on right now. And then a war, then oil. So it's a lot of factors that's, impacting the market right now. And so a lot of people are trying to sell and a lot of people are getting scared when I think these are good opportunities, great opportunities to just buy, especially if you want to just buy and hold, right? So I just wanted to get on here, talk to you guys a little bit more, and kind of help you guys better understand, like, even though there are a lot of things going on, um, it is very good ways and good opportunities to just buy. And especially if you're buying and holding, I think this is a perfect opportunity to start looking. And I feel like the market's going to go down anyway. Um, last year was a good year and everything was hitting all-time highs. You saw like a lot of companies just hitting all-time highs. So I feel like this would be a perfect time for the market to do a recorrection. And a recorrection is when stocks go down about 10 to 14%. So even if it does go down, like that would be a great opportunity to just buy, especially if you're just buying and holding. Because in order for stocks to reach new all-time highs, it has to do a market correction, which means it has to go back down to then just progress back up and keep striving for that all-time high, that new all-time high that they're trying to reach. Right. So I feel like this the market is in need for a market correction, and we should be looking at stocks to invest in, stocks to just buy and hold for the long run right now. And just don't panic sell right now. It's a lot of things going on, yes, but you shouldn't be panic selling right now. Um, so yeah, y'all. I just wanted to get on here and say that. It's a lot of things going on right now. But yeah, let me know if you want me guys to do more videos like this. My bad, y'all. That was crazy work right there. Let me know if you want me to do more videos like this. Trying to do something like this every single week, but especially because of what's going on right now, I kind of just want you guys to just be a little bit more informed and help you guys better position yourselves for what there is to maybe come and what is going on right now. So, thank you guys for watching. I hope you guys learned something in this video. I hope you guys uh stay blessed, stay positive, man. And yeah, I'll see you guys in the next video.